Yeah, excellent. Okay, so good morning, everybody, and welcome to this week's webinar with FX Street. Thank you all very, very much for joining. What we will do in today's webinar is we're going to go through all of the charts and really take a look to see, what's going to be setting up in the weeks and months ahead. Okay, so we're not going to be looking at the day trading stuff as we usually do. We're going to look at more some longer term trades and look at sort of like the current themes. So see if we can identify some of the bigger trends that are going to take place in the first few months of this year, or indeed first half of this year. Okay, so before we get started though, and this is more important than ever, I guess, is a disclaimer. The content of this webinar is not investment advice. Okay, so we will be talking about long-term positions here, but it's more for educational, it's purely for educational purposes. What I'm doing is I'm showing you how I go about analyzing the market. So when I go about position trading, looking for opportunities for the long term, this is what I'm going to show you in this webinar here. But nothing that we talk about is advice for you to go and take the trade yourself. Okay, you still need to go and do your own due diligence. You still need to make your own decisions. Does that make sense for you all? So a very brief intro into myself. My name's Alex Ong. I'm the co-founder of Traders Corner. So Traders Corner Online. It's a education website. So we help people like yourself finally find some profitability in the marketplace. We've been trading, when I say we, I'm talking about my brother. My brother and I have been trading since about 2005. We've co-authored many articles for FX Street. We've been quoted on the NASDAQ. We've authored a few other manuals now, some trading manuals and strategies and things like that. Video courses, and we're trading coaches. And if you want to follow me on Twitter, it's at Alex Ong UK, although to be honest, I don't go on there all that much. But okay, that's enough about me. You guys have come to see the good stuff, which is let's get rid of that. Talk about the markets going forward. Now, when I'm looking at long-term positions, okay, I look at probably about 30 different currency pairs, but I always start off by looking at the majors, all right, because I don't know if you know this, but the majors ultimately will drive what happens in the crosses. So if I'm looking to go long, let's say, the Australian dollar, so the Aussie dollar and the euro dollar, because those two pairs together will then make up the euro Aussie. So they all impact each other. So I won't just take a trade on one of the crosses without first having an idea of what's happening on the majors. All right, so we're going to start off with the Aussie, and we're looking at longer terms. We're looking at the daily and the weekly charts. Now, looking at the Aussie here, we can see, first of all, from the weekly chart, where are we going? Well, at the moment, we're in a downtrend. Okay, so my bias is going to be short in this no matter what. We've come up to this. Before this, the market going back to 2011, when it broke above the 95 level, it kind of held that level until the very end of last year, when eventually it broke down. And it broke down on the back of Governor Stevens talking about easing and all of that kind of good stuff in Australia. So the markets then broke down and it came back up to this level, and it found resistance at this level, and this is something you see time and time again in the trading. So you guys should always be looking out for this. For me, the most powerful technical tool in the markets is a horizontal level of support or resistance. This previous support becomes resistance, or just trading bounces off of this level makes so much sense. Okay, and we've actually got some strategies specifically just for trading, naked levels, and they're very, very powerful. So anyway, we've got the market was finding support on this level. It broke through the level. It's come back to it. And this is on a weekly basis, remember. All right, so I'm not talking daily basis. This is a big, big level here. When the market broke through this level, it then came back to this level. And what happened? Sure enough, treats it as resistance and finds a reason to sell off. So the big question is, where are we going? Okay, what are we going to look to do in the next sort of half of the year? Well, essentially, the market is doing some of it now. It's breaking out from below this support level here. Obviously, it found some support there, but it's breaking out below it. Now, if the market closes below the level over here, we're going to be looking to then get short on the break below that candle and look for this, and this will be an initial position, all right? So we'll build into these positions here. So once we dip a toe in on the weekly chart, we'll then go to something like the daily chart, for example, or one of the range charts, and look for additional positions to be able to build a bigger position in the longer term direction of the trend. But what we want to make sure that we don't do is we don't want to miss the trade altogether. All right. So the first opportunity to get in, we'll stick a toe in. So if we get a close below here, we'll be sticking a toe in. We'll have eyes on this level here because this potentially at the 85.60 level could cause us a few issues. But ultimately, the bigger level that we're going to be looking at is we're going to look for the market to trade down towards the 80 level. All right, so we're looking for quite a big move there, sort of a 700-800 point move, pip move, down towards the 80 level there. Obviously, we'll be taking further entries on the daily and the range charts, but from a long-term perspective, we can only really see the Aussie going down and visiting this level down here. Will it do that? No one knows. Okay, we don't have a crystal ball, but that is the most likely point for this particular pair to turn around. Remember, when trading, we're talking about taking the path of least resistance. And for this trade here, the path of least resistance is a sell trade to the bottom there to get down towards the 80.65 level. If we try and go back above here, do we have resistance? Yeah, we've got things that are in our way. We've pretty much got fresh air over here all the way down to the 80.60 level. That was the reason we're looking at this level. This is where a big turnaround happened. Okay, so the market sold off with quite some momentum down here, and then we got a big reaction to that level. So it's safe to say that if the market can just break below here, the next logical stopping point is going to be down here at the 80.40. Now, it's not necessarily going to be plain sailing. You will have to sit through pullbacks. All right, that's only normal. Having said that, if you can stick in there for the long run, you should be able to have a pretty decent risk reward trade on there. So you'd be getting in there at 91. You'd have your stop somewhere around 91.20, 91.15. You're going to be in there somewhere around the 87.50 level. All right, so what's that? 87.50, 91.15, roughly 400 odd points. And then from there, around the 87.50, you're then looking at 700 pips. So you've got better than a one-to-one risk reward there, which is a good thing. All right. However, remember, you will also be adding some smaller positions along the way. So when you add these smaller positions, this position here, which originally starts out as sort of like, 1-2% risk of your account, when you add additional positions, you can end up with something that may, increase your account by 5-10%. That's the point. That when you're taking longer term positions, there aren't going to be as many of them, but you build into them. Okay, so you build up a portfolio of different positions. So the Australian dollar is not just going to be the only one that you look at. You'll be looking at other ones. You try to get into some uncorrelated markets, and the aim of all of this ultimately is to have a portfolio of maybe 5, 6, 7 different ideas, okay, different trade ideas that you've got going on. Hopefully all of them go make money. If they don't, not to worry, because you're taking high probability setups, and what you end up with is something like maybe 4 or 5 that will make you, let's say 2 or 3 that will make you modest amounts of profit, 2 or 3 will stop you out, and 2 or 3 of them will be absolute home runs, and you'll make a great deal of profit on them. Okay, now that's what I'm. It isn't day trading. It isn't prop trading, if you like. It's more managing a portfolio. So for those of you that are looking to grow your capital, you're not looking to make 100% a month and stupid things like that. This is something that you can do in your spare time. So you don't need, hours upon hours of screen watching, sat there in front of your screens all day long trying to find a trade. You can do this in the evenings. This is something you can do. Once you've got an idea of what's going on, you'll spend 15 minutes in an evening because you'll already have your trade ideas. And then the 15, 20 minutes in the evening will be, you'll come to the chart, you check the trades that you have on. Is there the option to add any more to that position? Do you want to take some off? Do you want to move a stop to break even? All of that kind of good stuff. And then maybe you'll browse one or two or the other currency pairs and see if there's any opportunities there for a longer term position. Does this make sense to you guys? Yeah? Excellent. So that's the Aussie for us. The Aussie, we're looking for it to go short. We're looking initially down to the 80-70 level. What about the Euro? The Euro is a little bit more difficult here. The reason that the Euro is more difficult is ultimately, if you take a look at this here on the daily, look at it on the weekly, it's going absolutely nowhere. So at the moment, I would say I'm not really willing to take anything on the Euro for the time being. We'll move on to the pound dollar. And the pound dollar chart is towards the highs here. All right. So on a weekly, again, we got the same situation as the euro. So we look at that there. We're at sort of like a resistance level. If we don't have that one there, we've got this one here. So from my perspective, I'm not really willing to do anything on the pound at the moment until we break up above that level with some momentum from a longer term perspective. I don't like going against the trend. All right. So, I'm not going to take a sell trade there, but equally there's too much in the way for a long opportunity at the moment. So with that in mind, we'll move on to the New Zealand dollar eventually. When it opens. Are there any questions so far? Anyone? Yeah, the status of the EU, the euro dollar, is that there is no status. There's kind of not a lot on the cards for it, if I'm honest with you. If you want, I can go back to it for you once this thing loads and go in a little bit closer. Sideways, yeah, exactly. You say uncorrelated. Which markets are uncorrelated? Well, it's a difficult one in the currency markets because a lot of them are obviously correlated. But what you're trying not to do is, let's say, for example, you don't want to be in Euro, Aussie, Euro CAD, Euro Yen, and Euro New Zealand all at the same time. Do you know what I mean? Because ultimately, they're pretty much what happens in the Euro is going to have a massive impact on what happens with everything else. Does that make sense? Do you find higher time frames bring you better and more predictable win rates? Broadly speaking, yes. For me personally, and I'm going to be completely honest with you here, I don't like the higher time frames as much. I do it because we manage portfolios and things like that, so we have to look at longer term time frames because, that's as you said, it kind of gives a little bit more predictability about it. But from my personal perspective, I prefer the shorter term time frames, and I can get quite a high win rate on the shorter term time frames. So yes, I hope that answers your question, Manol. Yeah, excellent. Okay, so New Zealand dollar. Again, this one is kind of in a range at the moment. There's not much that can be said for this one here. So far, what have we seen? We've seen that the Australian dollar is getting weak. However, the euro, the pound, and the New Zealand dollar, they're all in a range. So at the moment, if you were looking to short the Aussie, looking at this so far, shorting the Aussie against either the dollar or the euro, pound, or New Zealand will probably bring you about the same in. But what ultimately you want to do when you're trading longer term is you want to be trading something that's very, very strong against something that's very, very weak. At the moment, we haven't found anything that's particularly strong. The pound is at the highs, but it's got the possibility that it could fall off. Okay. So at the moment, there isn't, apart from the Australian dollar, there isn't sort of like a clear trade here that makes, so much sense that you just have to be involved in it. Okay, here we go. So the dollar CAD is looking strong at the moment. The dollar CAD is broken out from the highs. What are we doing on the weekly? Okay, we're at this level here. If we can hold above this level, we're broken out from these highs over there. Okay, we're now holding above this high here, and the dollar CAD, the next reasonable level, if it holds above this level here, the next reasonable level that we can expect it to stop at is all the way up here at the 118 level. We're down here at 10948. So if we can hold above here, we can reasonably expect sort of like a 9 big figure move up to the 118 level. So you're looking at sort of 900-ish pips there. So at the moment we're thinking that the Aussie CAD is, the Aussie dollar is looking weak. The dollar CAD is looking stronger. What am I talking about here? I'm being retarded. The dollar is looking stronger. The CAD is looking weak. Okay, so the dollar is looking strongest at the moment. So let's carry on. Dollar franc in a range. Wonderful. Dollar yen the yen is looking extremely weak. So at the moment, really, and I don't know if you guys would agree with me here, but at the moment it looks like the dollar is the strongest currently, and the CAD, the Aussie, and the yen are the weakest. Do you guys agree there? Manoy, Alex, when you hold trades for a while, do you find on some pairs that during the Asian session, some brokers massively increase the spreads? I do find that, not so much anymore, but depending on which broker you're with, I have had that in the past. I haven't necessarily been stopped out because of it. But yeah, that's a possibility. Okay, so we all agree so far on where we're at. So the question is, what trades are on the table? Well, really, the Aussie dollar so far, if we look at the majors, the Aussie dollar, we're looking for a sell. The dollar CAD, we're looking for a buy. So the Canadian dollar and the Australian dollar are the weakest currencies by a country mile. The problem that we have right now is there isn't anything that's particularly strong. You see, this is breaking out to the highs here. I mean, maybe if we go back to the pound dollar, you feel may come down and not be. Just because it's playing with the extremes. I'm talking completely technically, Pan here. Okay, so it's playing with the extremes. If we can get above this level, then of course, I'll be willing to take that to the upside. That's not a problem whatsoever. So if we can get above this level here, then I'm going to be looking to go long the pound. So potentially, we want to be looking at things like pound Aussie. All right, so possibly a long pound Aussie or a long pound CAD. And actually, I'm currently long pound CAD as it is at the moment. So, and you can see these charts here. So looking for an opportunity to get in long on these ones here. I actually just on a 45 range chart a couple of days ago got long the pound CAD over there. Went up towards the highs. I saw about 100 pips of profit. Then it's gone down to about minus 80, and at the moment I think it's about 90 pips in profit there. So if we can get a break above here, that would be a good one. But so looking at the moment, the pound looks like it could be strongest. Obviously the dollar's strong as well. So we'd be looking at the dollar trades or pound Aussie, pound CAD, pound yen type trades. Okay. But we'll go through each of these pairs individually anyway, so that we can see if there is anything that's interesting. But what we've just done there is that's given us a good overview of what's going on in the markets as a whole. That's not to say that the intraday gyrations won't go against our longer term view. That can happen a hell of a lot. But all we're saying is that in the long run, we believe that these pairs are going to go in that particular direction. Yeah? So, let's move on. How do I confirm a strong trend? Strong trend. Ultimately, visually, to be honest with you, there's no the direction is clear. So if we go back to the pound Aussie, for example, you can see here that the direction is clear, right? Can anybody not see that this is going up? Yeah? So what we're doing is we're waiting for the markets to give us an opportunity to enter. Now that's going to be your preferred entry technique. There's no right or wrong answer here, okay? But what I like to see is I like to know where the market is going. Once I know where the market's going, I'm then going to be looking to get into a trade. Now I'm going to give you a hint, all right? You don't want to be standing in front of trains. So if you get, let's say, big momentum moves against you like this here, more often than not, I'm not going to be looking to be getting into that trade. So I wouldn't look to get long there because I don't like to stand in the front of a train. What I much prefer are moves like this. A nice pullback that's harmonic. So if you look at the previous move up, that sort of a pullback is completely expected. The pullback isn't too aggressive, so we don't see a lot of people jumping out of the position there. And then when you get back towards some sort of a level of support or resistance, in this case, it wasn't this trend line here because this trend line I've only put in because that's there. The level that the market was reacting to was this level over here. So when it gets back to that level there, when you can see some sort of a reaction to it, and ideally actually before that would have occurred, we would have been looking over here. Oops. Okay, so the ideal entry for something like this is you see the market breaks down above it. When it breaks back above, you can either get in on that trade there, or you can wait for the market to pull back to it and then react again. And you could have been in on this one over here at the 11th of May and pushes you all the way up there. All right, but what you're looking for when you're trading, you're looking for the markets to be behaving harmonically. Okay, you want them to be behaving well, which means that the pullbacks are not more aggressive than the moves in the direction of the trend. If you've got a pullback that's more aggressive, something's wrong. A pullback in a trend needs to be profit taking. It needs to be ultimately people, market participants that were making money on the way up, booking some profits, waiting for a lower price so that they can get back into the trade in the direction of the trend. If you see an aggressive move against the trend, what that actually tells you is actually, the trend may not be as strong as you once thought. The trend may be looking to turn around because you've got a whole lot of people not just getting out of positions, all right, but you've got a lot of people selling it, and you've got people getting out of positions and very quickly willing to accept lower prices, all right? Because if you think about this, for every buyer, there's a seller in the market. Do we agree on that? Let's just talk about the psychology of this for the moment. For every buyer, there must be a seller, right? So if every buyer there's a seller, why would the market move? Let's think about this for a second. What moves the market? If every buyer there's a seller, then someone believes it's going to go up and someone believes it's going to go down. The difference is that, let's say, for example, in a market over here, the sellers aren't willing to accept a lower price. Okay, so their ask price for their offer price is going to be going up and up and up. And the people buying are going to be willing to accept at a higher price because they believe that the market is going to continue moving upwards, right? So that's what's actually moving the markets. If you're in an upwards moving market, the sellers are not willing to sell. Yeah, the sellers are not willing to sell at lower prices. They believe the markets are going up, so why would they? If we look at this in terms of, I don't know, a house or something like that, okay? If the housing markets are going up and you've got your property on the market for, let's say you've got £500,000 property, all right? You have your property on the market for £500,000. There's reports everywhere that the housing markets are recovering. There was a piece in the FT the other day about there being something like 9 or 10 buyers for every property right now. Now, if you know that, and you've got your house on the market for £500,000, all right, would you be willing to take an offer of £450,000 for that house? Anyone? No? Me either. Is it just Canada wouldn't be willing to accept it? Okay. Hey, Joe, you wouldn't be able to. Yeah, okay, excellent. So you take my point, right? If the markets are moving up, you aren't willing to accept a lower price for your house. You don't want to do it. However, if we go back to the housing crisis, where no one could get a mortgage, so no one could buy it, you probably had, I don't know, 5 houses, for example, for every one buyer, and the markets were losing value every single day. So, you saw 5% coming off of your property value every day, maybe that's a bit extreme, every month or whatever. Okay, in those circumstances, actually, if someone came into you and said, all right, that's worth $500,000, I've got 480 grand, the markets are falling off a cliff, potentially your property is going to be worth £400,000 next month, you're going to be more likely willing to accept a lower price, and you'll be willing to get to that lower price quicker than you would be if the markets were stable, right? So, Joe agrees with that. Pan, you agree? Okay. So the currency markets trading is no different from that. If the markets are going up, and this is what I'm saying about reading the markets, okay? So if you've got a super aggressive move, and I'll try and find one here. Okay, so this here. If you've got a super aggressive move against your position, all right? So you had this nice, well, actually that's kind of harmonic. You would probably look to sell that. Let me try and find another one. Let me try and find a good example. Okay, look at this here, right? We are in a downtrend. The markets are moving down. We've got a nice aggressive move to the downside. However, let's look at this move, this pullback here. This pullback is equal to the prior move down. Agreed? So this move down here, this pullback is equal to that. So what does that tell us about the markets? Okay, because I really want you all to start to learn to read the markets, not just trade a chart pattern, but to understand what's happening in the markets. Because once you can get to that point, you can then trade profitably. You can then make money from the markets. Okay? So let's walk through this a minute. So we've got an aggressive move to the downside. We've then got a super aggressive move against it. Now, does that mean that there's a trend change? Possibly, not necessarily. But what else? Sorry, one second. But what else does that actually tell us? That tells us that as many sellers as there were there are, or as quickly as people were willing to sell, going down here, and basically get out of the position, people were willing to buy on the way back up. All right, this is more than just profit taking, because if this was profit taking, you'd find the markets come back to sort of this level and hover about. But actually, that's a full retracement of this previous move here. So if I saw that, I'm not necessarily I'm not going to be, completely thrilled getting short right there, because we've just seen a massive momentum move against it, and then a massive momentum back in the direction from where it just came. So I'm not going to be crazy about getting short here. I'm not saying that I don't want to, because the overall trend is down if we look at it. But if you just look at this move here in isolation, that tells you something about what's going on in the market. Does that make sense? All right, so that's what you need to start looking at in terms of when you're trading, Things like this here, nice momentum move to the downside. Yep, this is untidy, so I probably wouldn't take it anyway. But the pullback here, this tells you that people are willing to accept lower prices. And if they're willing to accept lower prices here, after a momentum move like that, then at some point, the market's going to try and push it further down. Sharon, this market is really unpredictable. Are you talking about the markets in general, or the markets that we're currently in, the state that we're in, Sharon? What are you referring to? I don't agree Completely. I mean, we know that we do know that the bigger players will try and get they trade large liquidity, right? And they need to trade at areas where there's going to be large volume. But I don't think that it can be super highly manipulated in the sense that there's one person out there that's deciding the market's going to go a certain way and that's the way it will go. Not in the long run. Yeah, for sure. In the short term, the larger funds out there can push it in a particular direction, but in reality, it's only really the governments that have the sort of power to be able to do that. And I mean, when we talk about the governments, they don't always win. And I'll show you the dollar yen, for example. So we'll talk through the dollar yen just to go through your point there. You see what the market was over here. So the dollar yen falls off a cliff, right? We've got this massive down move here. I'll show you what a sort of like a half-hearted attempt at manipulation is, all right? So some of these spikes here, this here was the where was it? The earthquake somewhere around here. But anyway, some of these spikes up here, like that, this was the Bank of Japan intervening in the markets. So they're saying the yen is too overvalued at the moment, we need to devalue it. So we'll throw a whole load into the market and see what can happen. Bang, market moves up. What happens days later? It's back down to where it first started. Let's give it another attempt. Moves up where it first started. What about another attempt there? Okay, we'll go higher again. And where does it come back to here? It's only in this point here when Abenomics got introduced that they made a concerted effort to say that actually, you know what? The yen is way too overvalued. We're going to do everything to, make our economy better, to devalue the yen, and then a concerted effort there. That's when we have that move here. But prior to that, you had a lot of central bank intervention on these spikes up over here, which is absolutely nothing. Okay, so yes, they can be manipulated in the short term, but in the long term, it takes a hell of a lot to do that. And the other example, obviously, is the euro franc, which, let me bring that up for you here. Do I have the euro franc? Why do I not have the euro franc? Let's bring the... Okay. Can you guys help me out? Because clearly I'm blind here. Okay, I don't understand. Oh no, it's down here. There we go. So let's take a look at the euro franc when we talk about manipulation. The euro franc was basically falling off a cliff. And then the Swiss National Bank came out and they said, okay, you know what, enough is enough. The franc we're going to put a floor under the euro franc, and that's going to be the 120 level. It's not, there's a floor there. It's not going any lower than that. Take a look at what happened after. Seriously, look at that there. That's manipulation. That's the market's not willing to go any lower than that, because what happened last time the markets tried to do that, you're in a position here. You are literally, what is that? 1,000 points, 1,000 pips, 110 up to 120 in a single day. Wonderful. Okay. Sorry, I digress. I've got off topic. Apologies for that. Let's go back to looking at the charts and looking at the setups. But the important takeaway from what I just showed you there is, does it make sense what I'm talking about here? So rather than just taking a system and looking at it in isolation, looking at the markets as a whole and making an educated guess, not just because MACD's crossed here and stochastics have done this here, but actually saying the markets have come from this point here. The most logical point for the market to go to next is down here. Will it go there? Who knows? Maybe not. But that's the logical place for it to go. Does that make sense? Okay. So let's move on. Where were we? So we're looking at some of the Aussies. Now the Aussie is getting weak and the Canadian dollar is getting weak. So where's the Aussie CAD going to go? Probably nowhere in all reality. And it's stuck. Well, let's see. The Aussie is stuck in a little bit of a range here. It's holding beneath here. So most logically speaking, where are we going to go with this? I mean, the Aussie and the CAD are both very, very weak at the moment. So really you can only trade on technicals. And on technicals for this particular pair, you would expect that the Aussie CAD gets down to sort of like the 92 level. So the Australian dollar will weaken significantly. All right. But at the moment, there's no real clear trend there. There's better opportunities in the market, so you wouldn't look to trade that one. Aussie franc. So I've got some lines left in here from previous trades we were taking. So Aussie franc, we are still bearish on. We believe that the markets, if you see here from a weekly chart perspective, the most logical point is down here at the 71 level. Whether it gets there or not is something different, but that's the logical level. And the market has been playing up against the resistance levels quite nicely. Most recently, looking at the shorts there on the Aussie franc, initially looked for it to go down there, but obviously if we can get into a longer term position and hold it down to the 71.70 level, that will be very nice. Aussie yen. Yen's weak as well again, so this one will be difficult to pick a trade on. The Aussie yen, what do you know it? There's a surprise. Sideways. Do we want to trade this? Not really. We want to see the market break out above or break out below it. So, yes. Aussie New Zealand. Now this is one of our preferred trades coming up in the new year, because we believe that New Zealand dollar may, well, from a chart perspective, it's still kind of sideways, but we think that there are some fundamentals there that will push it higher. So from an Aussie New Zealand perspective, we can see that clearly it's down. So we're just waiting for a pullback now to be able to get into this particular move. But no, it looks like a good one. You definitely want to be short here. It has gone some way. Even if we get a pullback, let's say if we got sort of like a pullback up to these levels here, I'd still be well willing to sell it. So in fact, you know, that might be the best approach, is wait for the market to pull back somewhat. So what's that, like a 500 pip pullback, and then look to get short from these levels around here with a stop above there, looking to come all the way down to the 155 level. So potentially you could get into a trade there with sort of like a 100 to 200 pip stop, but a profit target of, you know, 500-600 pips. So very, very nice risk reward there. Fred, it's looking like a cheap buy. Well, it is, but the as I said to you earlier, this would be standing in front of a train, and I personally don't like to do that. There's no real, hold on, let's see, is that a level there that we could trade from? We need to be trading from a level. Okay, so from a weekly perspective, if you want to go against this here, you're actually at a perfect level. Looking at the reaction to that level there, we've got a huge buying away from that level there back in 2008. We're now at that level again. So if on a weekly basis the chart closes above this level here, then certainly you could be looking to take the trade back up to that level, which we've identified where we want to take a short from. So in actual fact, good thing you brought that up there. If you really wanted to, you could play both sides of this market. You could look to take the buy up to that level, then when it gets back up to this level, sell it back down again. Okay, so the Aussie New Zealand, there looks like there could be quite a bit on the table there. CAD franc. CAD franc. Okay, looking to the weekly chart is pushing down, daily chart's pushing down. The one thing I love about the franc pairs, they really seem to pay attention to the levels. CAD franc is at a level, or previously was at a level there. It's playing with these lows here. If you look at what's happening in the market, and again, this is telling the story, all right? So if we look at what's happened in the market here, up until this point, every time the market has swung low, it's broken to new lows, all right? But there's a clue here. If the market holds this level and comes back up without breaking to new lows, then we could possibly be seeing some sort of maybe a small trend reversal, but certainly a trend reversal of types. We could see the market move up to here and even up to this level up here. Okay, why? The question is, because every swing down low before that managed to get to new lows. No matter how insignificant, they still managed to break out to new lows, all right, eventually. With this particular move here, it hasn't managed to do that. If it holds above this level and trades back up to it, you could be looking for something up to this level or this one here. If it breaks down, then you'd be looking for the market to break down to somewhere around the 78 level, then followed by a pullback to the 82, from where you could look to take another sell. Okay, the CAD yen is going sideways, which is a surprise. Why is that a surprise? Well, it's not, but we saw that the yen was weak and the Canadian dollar was weak. So where's this pair going to go? Sideways. Okay, you always want to be, as much as you can, you want to try and match up a strong currency against a weak currency. That's where you're going to make the majority of your money from a longer term perspective. Okay, we're getting towards the end of the allotted time. Are there any questions? Any view on gold? I don't actually have a gold. Oh, in fact, do I? Let me see. I added the instrument here. Do I have AU? Let me. Don't know if I've got the feed on this particular platform. I'll take a look. Yeah, Sharon, it could be. Last year was a very good year as well for FX. Yeah? Yes, indeed, Manoj, but I don't look at those as much as I do the currency pairs. I feel more comfortable. I know the currency pairs a lot better. So it's going to take forever and a day to load this chart. Any other questions? The important takeaway, people, and this is something that my brother and I always try and teach our students, is that there are 1,000,001 systems out there, okay? 1,000,001 systems out there that can make you money. You know, that goes without question. But what you need to do, what you need, that extra little bit to help you sort of finally cross the line, is to stop looking at these systems in isolation. Right? Start to try and put market context around your decision. So rather than just looking at it and saying, you know what, the stochastics is crossed to the upside, the MACD is oversold, so I'm going to buy it here. Rather than just do that and look at it in isolation, look at the overall market context. Look at where it's come from and potentially where it can go to. And if you can start to do this, then you'll start to pick much better trades and you'll start to actually make money from this. Now, the reason that people don't do it is it seems like actually that's too much hard work. Who wants to do that? Yeah, but who wants to look into the fundamentals? Who wants to know why it's moving somewhere and all of that kind of good stuff? But actually, if you're serious about this, if you want to make money here, that's exactly what you need to do. Okay, you need to start building your portfolios around things. You need to start understanding what's going on in the markets and what's driving the markets, rather than taking a little signal in isolation. Exactly. Market structure, market context, and price action. Okay? And knowing the fundamentals doesn't hurt either. Okay then, people. Well, we are out of time now, so I'm going to wrap it up. I'm going to say thank you to you all for joining. I hope you enjoyed today's session. FX Streets, thank you very much for having us. We always appreciate you putting on these webinars. I think they're very, very useful to the people that take part. So thank you very much again. And let's hope we have a wonderful 2014. Okay? Any questions, drop us an email. Otherwise, I look forward to seeing you all on the next webinar, which will take place in 2 weeks' time. Are there any specific topics that you'd like me to cover in the webinar in 2 weeks' time? Fundamentals, okay. Proper trend identification, how you gauge fundamental news. Okay, so we'll do one on fundamentals next time. Okay? Okay then, people. I will speak to you all soon. Have a very good day and good trading. Take care now.